Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Nigro, and I'm a partner in the Private Equity and M&A group at Stikeman Elliott. For today's podcast, I'd like to welcome our guest, Andrew Gowan. Andrew is the Regional Vice President, Commercial Banking, Ontario for National Bank of Canada. Andrew, thank you for joining us and welcome.
Thanks, Mario. Great to be here.
Andrew, we always start by asking our guests to tell us a little bit about themselves, but about what they do and a little bit about your work with the National Bank of Canada.
For sure. Thanks, Mario. For my background, I currently lead up our National Bank's commercial bank in the province of Ontario. It's a team of about 45 team members covering off 5 separate offices, 2,500 clients, fully diversified in terms of industry coverage. And I say my path to get here started in my career in sales and accounting, worked at another institution, and I've been with National Bank for 5 years now. And I think the impetus of me joining the National Bank team was really founded on seeing an opportunity in the Canadian banking market to do things a little bit differently, focusing on supporting Canadian entrepreneurs and doing that with, breaking down silos and bringing the full value into the bank to those entrepreneurs. So that's something I think we've been very strong at these last 5 years I've been with the bank. And we've really doubled down on over the past year as we've acquired Canadian Western Bank and expanded our presence nationally across Canada.
Andrew, I see you and National Bank very active in the middle market. You guys are pushing well into the marketplace and winning new deals. Tell me a little bit about what you're seeing right now. I mean, we obviously, with these tariffs, are trying to manage this whole tariff issue. And I do see, banks still lending, but want to get your perspective on how, from a banker's point of view, how you look at these tariffs, particularly when you're doing, acquisition financing or refinancing, how you look at tariffs from the banking point of view. I mean, we've seen more diligence is one thing, which kind of makes sense. And want to get your sense of how you're reacting to this market and how, you are managing, obviously, trying to get deals done in an uncertain world.
Yeah. And I think uncertainty is the name of the game, and being able to operate through that uncertainty is a challenge for sure. When the tariffs were first announced, I think everybody was hitting the panic button, really unsure about what was going to happen. As we've kind of had some opportunities to assess the risks on our existing book, as well as impacts to prospective clients, I think we've been pleasantly surprised that, at least in the mid-market space, businesses have been managing quite well. There's particular industries that are specifically impacted more heavily than others. But from a general sense, I think we're pretty bullish, and we see this as an opportunity as a bank. I was pleasantly surprised to hear this directly from our CEO the other day, that if we look at other Canadian banks retrenching with this news and being fearful, I think we want to use this as an opportunity to really expand our reach across Canadian entrepreneurs, doubling down on the Canadian business ecosystem, but doing it thoughtfully, right? So to your point on extra due diligence and assessing, risks associated with tariff impacts, that's something we're acutely aware of. And we are doing additional diligence procedures to understand what those exposures are for different clients. But we really view this as an opportunity for us to support Canadian entrepreneurs through a really challenging time. And there's a little bit more work that goes into it, but I think we're up for the challenge.
Andrew, when you're looking at financings and you're dealing with businesses that got a lot of cross-border exposure, whether it's sales, whether it's supply chain, is there anything that you're doing specific now that, given you may not have been doing before? There's a lot of Canadian companies who are doing cross-border sales or cross-border supply chain. So I'm curious how you're obviously trying to support these acquirers or these companies that you work with who are refining. You want to get your sense of how you're stick handling these issues with customers and with potential acquirers.
For sure. And I think operationally, we were quite busy setting up U.S. domiciled accounts so that tariff payments can be made and all of that. That has definitely been an area of activity. But as we look at onboarding new clients from a borrowing perspective, I tell my team, sensitize, right? So your sensitivity analysis and really looking into what are those different levers that could be pulled that tariffs will ultimately potentially impact. And anecdotally, one example we had recently was a client, and 100% of their sales were to the US. So, if they're getting a 25% tariff, that's going to flow right to their bottom line. But as you really dig into the information with that one particular client, they said, well, we haven't really investigated selling the product in Canada. So that's an option we could look at. We also could set up a U.S. entity that would allow us to do transfer pricing and the tax implications. And, there's some currency arbitrage. So when you look at a 25% tariff, it's really 10%. So, as you kind of dive in and really get granular on each particular case, you can get a sense of where the risk really is versus just taking it at face value and getting scared off by sticker shock.
I mean, one of the things I've noticed is that you said it earlier is National still is out there. I would say is one of the banks right now that really is trying to really increase their footprint. I don't know particularly where I'm at here in Ontario, but I think as you pointed out, even out west. And that's in a market where, people are sadly talking about the recession word. So want to get a sense from you, like you haven't slowed down. It doesn't seem like Nationals in any way, kind of on the sidelines when you hear about recession. And also tell us a little bit what you're doing at the bank in terms of managing, what could be a potential economic slowdown or how you look at it.
For sure. And the world I work in is the mid-market here in Ontario. And I would say the mid-market companies have been incredibly resilient. And we saw it through the pandemic. So we've got a kind of a very recent case study there. As a bank, institutionally, we had a great opportunity during the pandemic to expand outside of Quebec, which is kind of our foundation home base. And we had great success doubling down throughout the pandemic. And I think we're hoping to replicate it again through this current situation. I think that's something we're, again, viewing as opportunity.
In terms of had those wild times and 21 and 22 when that everything was just crazy when it came to doing deals and getting lending terms and all. I mean, have the terms tightened up? I mean, we still see active bidding on terms. You see it. I mean, banks are still bidding even in the mid-market, we see multiple bids on deals. Have you seen anything change when it comes to terms, whether it's more aggressive or less aggressive? But have you noticed on your deals that whether it's borrowers or lenders are pushing certain levers more than they used to, or certain terms have changed? And obviously conscious that we're not in the glory days of 21, 22 when everybody was lending everywhere and anything. So,
yeah, there's definitely a little bit more tightening, just generally speaking. I think if we look at some of the transactions that are maybe facing challenges post that COVID bump, they're the ones that were more highly levered. So I think the banks are acutely aware of that and being conscious of that as they extend new terms to borrowers going into a potential recession and with all these tariff uncertainties. With that being said, a good deal is a good deal, right? And I think there's always going to be appetite for strong management teams, strong business fundamentals. If you have the right transaction, I think it's helpful to drive more competitive terms in the market. At the end of the day, we're open for business. We're seeing a wide range of terms. There are deals we are being more conservative, but I would say that would be within market, right? And I think you're generally seeing other banks be conservative, particular industries or particular structures as well.
You've been doing these deals a long time, Andrew, to sound like we're both getting old, but we are.
Oh yeah, I mean, I have 10 years. Ooh.
Yeah, you look at your portfolio, in terms of the activities you spend your time on. Look, what are you seeing in the market? Who are the people who are lending? I mean, on the acquisition side, who are the players that you're seeing in this market? You obviously have seen a good breadth to give you perspective. So I wanted to get a sense from you on what you're seeing on the ground in terms of who are the people that are actively lending, what kind of deal people are you seeing, what kind of opportunities are you seeing, what trends you see from a deal perspective as a lender?
I say for National Bank, like our foundational values are really built on Canadian entrepreneurs. And, that's our growth mindset. That's our focus area. We're not going south of the border of the US. So if I look at, our mid-market team in Ontario, Canadian entrepreneurs are the focus of that growth. With that being said, we look at, we have a private equity sponsor coverage team. We do look at search funds, family offices, but the heart and soul of what we're trying to do is building on Canadian entrepreneurs. So I think that's probably where we're strongest is when there's an entrepreneur leading the charge, and whether that's just a strong operating partner or an entrepreneur who's going to make a management buyout or buy into a new company. Those are probably the areas we're strongest.
And are you seeing those entrepreneurs in this market be active? Like, what are you seeing in terms of the kind of work that they're calling you about? Is it acquisition? Is it refi?
For sure. We're seeing acquisition, refi, management buyouts. I think everybody's well aware that there's a shortage of entrepreneurs to take over, and succeed the existing kind of ecosystem of entrepreneurs who are looking to retire and pass the torch. So we are seeing management buyouts, entrepreneur-led acquisitions, LBOs. And I think that's an area where we're going to continue to see a lot of action just because of the nature of there's a whole kind of transition of businesses that needs to take place. There's a stat out there of $2 trillion worth of Canadian businesses that are going to change hands in the next decade. So I think entrepreneurs are going to be the heart of that.
Andrew, you obviously have been really focused on doing deals in Ontario, and you're kind of pulse on the ground in Ontario. You see the kind of environment that we're in now. I want to get a sense from you of the kind of trends you're seeing going forward. I always ask this kind of crystal ball question. Where do you think we're going, both in terms of the type of deals that you do, the type of people you lend to, the kind of opportunities that you mentioned, management buyouts as being one, other trends you see from a lender's point of view in the market that we should keep our eye on?
Consolidation is a big one. And we see more and more consolidators in various industries that maybe we hadn't thought of as ripe for consolidation. But I think that's something where there's more and more of a trend to that. And I think there's a great exit strategy there for whether it's US private equities who are already in the space, but building scale in industries where there's a bunch of very small operators. And if you look at Canada as a business ecosystem, it's a lot of small business, right? It's a very, very, some really, really big players, and then a super long tail of smaller players. So I think consolidation is a trend that we are continuing to see more and more of in all sorts of verticals. I think that's probably a big one.
If I could, Andrew, I know when we talk about national banks activity in the mid-market, obviously there's the kind of lower mid-market, there's the mid-market, and then we'll say the upper mid-market. When you look at the growth of deal flow, where do you see the most activity? Is it, under 10 million, 10 to 20, 20 to 50? Are you noticing anything in terms of size of deals and deals that are getting done, particularly in this market, but even as we go forward in terms of your experience? So
everywhere. And I think part of it's due to our size, right? So we're the smaller player in Ontario. So if we look at our national client group, which kind of likes to target lending 25 million up, they look at the syndicated loans, like they're growing like gangbusters right now, kind of like 30, 40, 50% annual growth rate, which is unheard of in that segment, but it's because of the penetration, right? And we're seeing the same in the mid-market. So I think one of our challenges is, we only have so many people. Our team's very talented, but they have a finite capacity. And, picking the winners. We want to partner with the right opportunities. We can't be everything to everybody. So we're focusing on, going up market and strategically choosing the right clients who fit with our vision. And I think we've been successful doing that. And I think we have the luxury of being smaller at this point where we don't have to be everything to everybody to reach and exceed our goals.
Andrew, I want to thank you for joining us and telling us a little bit more about your work at National Bank, but also about National Bank's kind of growth strategy. And I'm always say I'm happy that you're busy, because if you're busy, I'm busy. So thank you.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.